All right, folks, my next guest says that this being an election year changes everything, including the urge to sell in May and go away. Let's bring in Nicholas Wealth Management President David Nicholas. All right, David, so what's so distinctive for you with respect to this being an election year that would give us more confidence to stay in this market?
That's right, Charles. I can give you 100 years of data that shows us election years, the market does really well. But what's interesting is also, when does the market do well? It's normally the back half. First half of the year, there's still some uncertainty. We see really some volatility for markets, but it's the back half of the year that we really see markets take off. Also, if you look at some of the years that were down, 2000 and 2008 were the only 2 years where the market ended up down during an election year. What do we have? We were in the midst of pretty big recessions. We're not in that right now. So I feel very positive. Also, this is the first year of a president's reelection term. We've actually never had a negative year for the market in the first term of a reelection campaign. So when you put all that together, Charles, I'm telling our clients, I'm telling investors, fight the urge to sell, because this could be a pretty good year for stocks.
All right. Now, one of the things in your note says that you say could help you fight the urge is this huge bullish sign of the S&P 500. This year, 50-day moving average. We crashed below it, and we fought back. Now we're back above it. You like now that we've been able to come back, and how long do we have to stay there, and do we have to take out the new highs, start making new highs to really, really get bullish here?
No, it's a great point. We want to stay there for a while. I want to see a multi-week close above the 50-day moving average before we get very confident. But I think we're seeing breadth. I know it doesn't seem like that on the surface. 8 out of the 11 sectors are all trading above their 50-day moving average. You brought up a great point about utilities. Utilities and real estate are the 2 highest yielding sectors of the S&P, and they couldn't be moving in opposite directions. Real estate's still well below its 50-day. Utilities is well above it. So what is that telling us? Well, it's not just interest rates. It's not just inflation. You've got a safety versus risk play. But when you see a sector like real estate not performing well, I think that tells us that there's still credit fear for the markets for real estate. But if the market believed rates were steadily going higher, utilities wouldn't be rallying the way they are. So I think that's some bullish sentiment to look at.
And what's really interesting, too, is like for the last year, maybe two, the big Mag 7 have become the de facto safe havens, and now it looks like we're back to traditional safe havens. Speaking of which, your stock picks, right? When I saw the list, I'm thinking when David Bowie and Queen got together and recorded Under Pressure, because these are names we all know, but they're all right now under a fair amount of pressure. Tesla, I mean, the only company with more bad news than Tesla is Boeing. Every day something's happening with Tesla. You say use this as an opportunity to buy it, though.
Charles, you're spot on. Hey, I love a sale, okay? I don't like a sale at Target because my wife really has a great time. But outside of Target, I like sales on stocks. That's when I go buying. So you're right. If you just look at, Meta's down 10% from its highs, Palantir's down 20%, Tesla's down 40% from its highs. Again, these aren't failing companies. These aren't companies that are slowing significantly. These are companies that are still growing their revenues, top line and bottom line. You want to go shopping. The time to get into these names, I think, is now, which is why we're putting money to work.
Hey, David, let me ask you about a name that I've played on and off for maybe 15 years, Viva Systems, right? I mean, it's not on my radar now. I was shocked to see it on your list. We've got a chart up here. It's like a 6-month chart. You got a gargantuan gap here. Must have to be earnings related at the beginning of April. Why would you start to buy this stock here now?
Yep. Great point. Look, if you've been a long-term investor in this stock, you can be very frustrated. Here's why I think it's a good time to put new money to work. If you just look at the life sciences sector, I do like this sector. But if you look at the way that Viva's going, it's an addressable market. They are a minority of that market, less than 12 or 13% on a market that's continuing to grow. So when we think about an economy that, whether it's slowing, I think life sciences is an area that we're going to continue to see a higher growth relative to the rest of the economy. Viva is a name that has upside in that sector. So if you have a year or two, I think this is a name to put money to work today. I think you'll be rewarded, Charles.
I love when we get these fundamental value proposition stories that go along with just technical analysis. David, thank you so much, my friend. Talk to you again real soon.
Thanks, Charles.